on RealAgriculture.com by Glenn Hodgson. He's with the Conference Board of Canada, and we're at FarmTech 2012. Welcome today, Glenn.
It's really nice to be here, Sean. It's a spectacular building. I'm looking forward to speaking to the biggest crowd I've ever spoken to, 1,500 people in about an hour's time.
You're keynoting today. You're giving the big economic outlook for the Canadian farmer, and I think there's a lot of people that are very interested to hear what you have to say.
I'm looking forward to it.
So for 2012, what's in store for the Canadian farmer as we look at the economic markets?
Okay, I'm going to try and mix together a structural message with the current outlook today. On the structural side, I think we should acknowledge that the emerging markets are really the new source of economic growth in the world economy. And as we think about ag products or any product, we have to look more and more to Asia Pacific, to Africa. That's where the growth markets are. We're still going to have good incomes in the industrial countries, in Europe, in the United States, in Canada, and Japan. But that's not where the future lies. The future really does lie with emerging markets. So that's a structural message. But coming back to 2012, these are turbulent times. The Europeans finally put in place a structure in December that I think will allow them to get through their financial crisis. But it's going to be a really hard slog. Greece could still fall off the wagon. They're the one country that's at risk of getting pushed right out of the Eurozone. And Europe's in recession because of all the turbulence, because of the huge financial resources that are being sucked into servicing debt, because of the austerity they had to put in place. So there's a big chunk of the world economy that's going to contract this year. That's pretty tough, because that could ripple into North America. It could affect all of us.
So are Canadian farmers and Canadian citizens, are they insulated from all this world economic turmoil?
In relative terms, yes, because we are clearly integrated within North America. We sell most of our product within North America. Ag sales, sales of food don't fluctuate that much over time. They really grow with incomes and demographics. But so that's in sort of absolute terms. But we're clearly, though, affected because we are part of a global economic system. The banking system, for example, is being affected by what's happening in Europe. Banks are having a hard time getting access to credit. Central banks are still stepping in, providing extraordinary amounts of credit. So nobody is truly insulated. We're all affected by this. But there is a good news story, which is I think the U.S. economy may finally be hitting bottom in terms of some of the really impaired sectors like housing. And we're forecasting growth of just under 3% for the U.S. this year, which is much more robust than I thought 6 months ago. And of course, sitting here in Canada, that's a good thing. Here in Canada, we're going through a year of deleveraging. Households and governments are going to have to get their income statement in order. Households are really over indebted in Canada. You have to watch that very carefully. We know that governments are taking stimulus out of the economy. So this will not be a strong growth year in Canada, but there will be growth of about 2%. Yeah. Stronger here in Alberta, Western Canada. So you put it all together, what I see is turbulence, a lot of risk, but we're not talking about double-dip recessions. We're not talking about anything like that. It's a matter of sort of proceeding forward, having growth continue, and then looking to the future and understanding that India, China, Brazil, that's the new future. We have to think about how we can tap into their tremendous growth and have increased sales and increased incomes because of that.
So less focus on the U.S. market for exports then?
Well, we're kind of drifting away from the U.S. slowly. We put a study out last week that most people have not yet seen, but we actually took apart what's called the value chain of trade, where we looked at where the real value is created, not the shipments of autos parts back and forth across the border 7 times before you make a car. Looking at the real inputs. And what we learned is that our exports to the U.S. are much lower than we thought historically. They're down to about 62%. They used to be 85, even 87% at the peak. And we're trading a lot more with Europe and with the Asia Pacific region. And there's a lot more value in services in that too. Less in manufacturers, more in services. So we're developing a very new view of trade. But yeah, to your question, we have to keep looking to the U.S. but also to the whole world economy. And I think Canadians are now slowly getting that. You know, the need to get out there and develop markets in the high growth countries.
Yeah. So when you say risk in the 2012 market or on the horizon here, what kind of risk are you talking about? Interest rate risk, or is it?
Well, I mean, there's a fundamental risk of the global banking system shutting down again, the way it did in the fall of 2008 into 2009, because of what's happening in Europe and the fact that the banks hold all the bonds in these countries that are now not able to make their payments on time. But that's being addressed. The central banks are pumping truly, the European Central Bank put 400 billion euros, that's $500 billion US dollars, of liquidity into the European banks to keep them solvent, to keep them afloat. But imagine if the financial system starts to contract and people can't get access to credit. That's a huge risk because everybody needs their banker. Like it or not, we all need access to credit one way or another. Yeah. So that's a key risk.
What about
energy prices because of Iran? I can go on and on.
Yeah.
The Arab Spring. I mean, there's a lot of risks out there. I've got a slide in my presentation talking about the 5 or 6 big risks. But it is really the risk of turbulence and churn and not having a clear line of sight into the future.
What about the general commodity outlook? Well, we're hearing a little bit more information out of the U.S. There's starting to be a little bit of concern about land bubble. Land prices getting so high. People thinking back to the real estate bubble and sort of now drawing some similarities. What's your feeling?
Well, I try and differentiate amongst the various commodity groups, first of all. Secondly, with strong growth in Asia, that means there is sort of chronic upward pressure on a lot of commodity prices. We see it in energy. Oil prices are back to $100 a barrel. If there was ever an event with Iran, they would go to 120, 150 fairly quickly. Food prices are strong. I'm going to talk about the ag sector and the fact that there is steady, strong growth in demand for food, and that's going to keep prices, we think, pretty high on a going forward basis. The flip side, though, is bubbles can form. And so I would worry about property bubbles in parts of Canada. They're not huge. I'm not looking at a collapse of prices. But I think this is a year when prices may soften in a lot of...
You're talking real estate or properties?
Residential property, but it could spill into other property like farm property. The same sort of concern exists in China right now, for example. There's a lot of worry. Property prices are falling right now in China, so clearly they've gone through kind of a bubble period, and that can get multiplied around the world. So yeah, we do look at commodities carefully, various sectors, but I think that there's the underlying demand for food will have a positive ripple effect for the ag community. I think there's very little chance of a massive deflation in land prices, for example, in agriculture.